So you're a proud owner of a construction business, right? You're out there every day working hard, managing projects and making sure everything runs smoothly. But there's one question that keeps nagging at you. How do I pay myself? Well, my friend, you're in the right place. Today, that is what we will discuss because let's face it, paying yourself is just as important as paying your employees or suppliers. So stick around because by the end of this video, you'll have a clear understanding of how to ensure you're properly compensated for all that hard work that you do. As a business owner, it's easy to get caught up in the day-to-day operations, putting out fires and keeping the wheels turning. But here's the thing. If you're not paying yourself, you are essentially working for free. Think about it. You are investing your time, your energy, and expertise into your business. You're taking on all the risks and responsibilities that come with being an entrepreneur. So why shouldn't you get compensated for that? Paying yourself isn't just about rewarding yourself for your hard work. It's about ensuring the long-term success and sustainability of your business. Imagine something was to happen to you and you would have to hire other people to do all the 17 jobs that you have been doing. If you haven't been paying yourself this whole time, imagine how much it would hurt you to all of a sudden pay a lot of those people your new team. That is why you would have to pay yourself as much as you would pay those people to do those jobs. It will also help you properly look at where the business actually stands because you will be able to see exactly how much money is coming into the business and coming out. All right, so now that we've established why it's important to pay yourself, let's talk about how to actually do it. And there's something you need to understand how your business finances actually work. Your profit and loss statement shows you where your money is coming from and where it's going. It's kind of a snapshot of your business's financial health, and it can actually help you make informed decisions about how to properly allocate your resources. Putting it in simple words, that is what it means. You take your revenue, the money that you got paid, you subtract your cost of goods sold. Those are all the direct expenses that were spent on the project. You end up with gross profit, but that's not it. Out of that, you subtract your overhead, your insurance, marketing, office expenses, rent, bank fees, and so on. And you finally arrive to a net profit. And to have a good net profit, you need to consider all of these parts of the equation. Another important thing to consider is cash flow, the money that's coming in and going out on a daily basis. Understanding your cash flow is so important for managing your finances effectively and in really ensuring you have enough funds to cover your expenses, including your own salary. So in order to keep a pulse on your cash flow, you have to know on the weekly basis how the money is collected, where is it going out, what are the payables that you owe to subs and vendors, and receivables that you are owed. Also, you need to know the balances of all of your checking accounts and credit cards. You have to stay in control of your finances by looking at your numbers very often. All right, now, how do you actually calculate how much you pay yourself? Well, one approach is to determine your hourly rate as a business owner. Your hourly rate is essentially the value of your time. It's what you would earn if you were working for someone else, taking into account your skills, your experience, and the market rate for your services. So how do you calculate your hourly rate? Well, there are a few steps involved. First, you have to determine your desired annual salary. This is how much money you want to make in a year, taking into account your personal financial goals and your living expenses. Then you gotta calculate your overhead costs. This includes things like rent, utilities, insurance, just like we just talked, and other business expenses that are super necessary to keep your operations running. And then you have to estimate the number of billable hours you'll work in a year. This is the time you'll spend actually working on projects and generating revenue for your business. Now, you divide your desired annual salary plus overhead costs by the number of billable hours to get your hourly rate. Let's walk through an example to make things a bit more clear. Let's say you want to make 100,000 per year and your overhead costs amount to $20,000. If you estimate that you'll work 1,500 billable hours in a year, you would calculate your hourly rate as follows. So in this example, your hourly rate would be $80 per hour. This is the amount you would need to charge for your services in order to meet your financial goals and cover all of your expenses. Now, keep in mind that this is just a starting point. Your hourly rate may need to be adjusted based on such factors like your level of experience and complexity of the project and the current market conditions. Remember, you are not just selling your time, you're selling your experience, you're selling your skills, ability to deliver results. So don't be afraid to charge what you're worth and adjust your rate accordingly. All right, so now that you've calculated your hourly rate, it's time to put it into action and start paying yourself. So one approach is to set yourself a regular schedule and pay yourself kind of as a consistent salary, just like you would any other employee. That can help you budget and plan for your personal expenses and ensure that you're taking home a steady income from your business. Of course, you may also choose to reinvest some of your profits back into the business, whether that's hiring additional staff, investing into a new equipment, or expanding your operations. Just make sure you're striking the right balance between paying yourself and reinvesting in your business growth. And do not forget that if you are the owner of an S corporation, you must run payroll for yourself as a W-2 employee of your company. You can set yourself up as an employee of the company and receive those regular paychecks just like any other employee. But that also means that you will be spending money on payroll taxes. So another option is to take what's known as an owner's draw. This involves withdrawing money directly from your business profits for personal use. While this method offers flexibility, it can make it more challenging to actually track your income and expenses as it doesn't show up on your company's payroll records. If you pay yourself through payroll, your salary and any associated payroll taxes, they're included into expenses, which reduces your net income. However, if you take an owner's draw, it's not considered an expense and it doesn't impact your net income directly. That's important for taxes as well. So the important thing is to remember is to job cost your own hours if you're working on the project. This way you would know the exact cost that it takes to manage the project. That's all I've got for you for today. If you found this video helpful, please like it, subscribe, and share so more people can find this helpful information. And as always, if you have any questions or topics you would like me to cover, just let me know in the comments. Till next time!